I know that there's most definitely going to be an audit risk question, right? So how should it be structured? When you're writing an audit risk, identify a risk from the scenario. Does it cause an overstatement of assets? Does it cause an understatement of liabilities or expenses, right? All these things needs to be mentioned properly. Yeah, control deficiency questions as well, right? They can either ask for you to identify certain control deficiencies, or impact on auditor's report. Remember, guys, 5 things needs to be mentioned. Okay, folks. First of all, also mention if the situation is material or pervasive. You'll get marks for that, right? Hey everyone, this is Vishnu Vijay, ACCA, a proud Fintrammer who's been teaching students across the globe and across designations, and I welcome you all to this session where we will be revising through the key topics of the syllabus part E of your AA or Audit and Assurance paper. Okay folks, so as you can see here I have review and reporting, right? So let's have a look at each of these topics one by one, shall we? The first and foremost thing that we have to learn when it comes to this particular topic is the independent auditor's report, isn't it? So how exactly is it structured? What are the contents, first of all, right? So there's obviously the title, which is independent auditor's report itself, right? And then the addressee, which is basically the person to whom the particular report is addressed to, basically the shareholders, right? And then we also have the opinion paragraph where we will state our unqualified, qualified except for adverse or disclaimer opinions. And then the basis of opinion paragraph where we will mention the reason for providing that opinion as well. And the next paragraph is the material uncertainty in relation to going concern. That's a really important paragraph to remember because a lot of our students tend to get confused with it. So guys, if the management has any doubtfulness over the going concern assumption of the business, then that is mentioned within the MURGC paragraph. It's an optional paragraph, okay folks? So if there is a doubtfulness regarding the going concern, then they will include this. If there is no doubt, then they will exclude it, okay folks? So remember that particular point. Now the next paragraph is emphasis of matter paragraph as well, right? EOMP as we call it. So when it comes to the emphasis of matter paragraph, the idea here is to reference those items which in the auditor's judgment is fundamental to the user's understanding of the financial statements. Okay folks, so we only include those information from the financial statements which we think is relevant for the users. Okay folks, so remember that particular point. Now a question can come up here, okay folks? So let's say that the company has been determined to be not a going concern. Okay folks, the company is not a going concern and the financial statement has been prepared on a breakup basis. Now if that's the case, then should I disclose this information in my EOMP paragraph or should I disclose this information in my MURGC paragraph? Now that's a tricky question that a lot of students tend to get wrong. So just remember this guys, as in if that is the case, okay folks, if the company determines that the company is not a going concern, then the EOMP paragraph is not, the EOMP paragraph is used, not the MURGC paragraph. Okay folks, so remember that. So that's a really, really important point to remember. Okay folks, so and what else? We also have the key audit matter paragraph as well, which is a mandatory paragraph, especially for public engagements, right? And then it is not really required if we are providing a disclaimer opinion, but else it is mandatorily required, especially if you are a public organization. Now, secondly, when it comes to key audit matters, what are the content exactly? It's entirely dependent upon the auditor's judgment, right? And it relates to the significant matters that have occurred throughout the course of the audit. Okay, folks, if you identified some sort of misstatement, if you have faced some challenges when collecting certain information, or if something is unclear, like if you were let's say auditing certain accounting estimates, for example, right? And something was quite judgmental, then all those things needs to be mentioned within the KAM paragraph. So remember that. And then we also have the other information as well. So when we know that the financial statement is published in an annual report, right? So within the annual report, it's not just the financial information or the financial statements alone, but there are also other things as well, such as the director's statements. There's corporate governance related aspects. There is social responsibility, environment related aspects as well. Some key financial ratios. All these informations are there, right? So we're just going through these particular information. Of course, we don't have any obligation to do that, but we just still review these information just as if they see if they are consistent with what is given in the financial statements. Okay folks, if there is any inconsistencies, then that will be, especially if there's any material inconsistencies, then that will be mentioned in the other information paragraph. So remember that particular aspect as well. And then we have the managers as well as auditors' responsibility to avoid any expectation gap or any misunderstanding between the regarding the responsibilities and everything. And then there's the report on other legal and regulatory requirements as well, right? So what's the story here? So when it comes to this particular paragraph, it's either shown as a separate paragraph or it is merged with the other matter paragraph as well. So what is the content? Well, we basically report on the regulation related aspects, like if there's any local auditing standards which we complied with, then we talk about that as well. And of course, in other matter paragraph, we disclose those items, or we provide reference to those items that we, in our judgment, think that it is fundamental to the user's understanding of the audit. Okay, folks. So what is the difference between EOMP and OMP? EOMP is where we provide reference to those factors which are fundamental to the user's understanding of the financial statements, and OMP is where we provide a reference to those items which we think are fundamental to the understanding, fundamental to the user's understanding of the audit. Okay, folks, that's the primary difference. One focuses on financial statement, the other focuses on audit. So remember that. Now, and of course, finally, there is the audit engagement partner's name and signature provided, along with the office address, like audit firm's address, as well as date as well. Okay, folks, this is like the content of the independent auditor's report. So remember this particular structure. Remember the order as well. It's very, very important. Now, moving on to the next really important topic, which is basically the audit opinion, right? And there can be questions where you have to provide the auditor, the impact on opinion as well, right? So remember that. So when we talk about the auditor's report, we have two types, right? We have the unmodified report, which is like a really clean report. There, we are stating that there is no issue at all when it comes to the audit, right? It will have an unmodified opinion as well. Unmodified, unqualified, they're used interchangeably, and it means a good opinion, right? So remember that. Now, moving on to the next one, we have modified report. Okay, folks, so when it comes to modified report, what's the idea? There are two situations, right? A modified report can contain an unmodified opinion. How is that? Because it will also have either an MURGC, EOMP, or OMP paragraph. Okay, folks, so let's say that the company is not a going concern, right? Then this particular situation will apply, right? So we will be providing an unqualified opinion because there is nothing wrong, but there has been something that we wanted to point out to the users of financial statements or something like that. Okay, folks, so that's basically the idea. That's what MURGC, EOMP, and OMP paragraph would indicate, right? So that's basically the idea. Of course, there are other factors as well, but yeah. So that's what this second situation is. Now the third situation, when all do we provide a modified or a qualified opinion, right? So there are two situations: whenever there's a disagreement with the accounting standards, or if there's an inability to obtain sufficient and appropriate audit evidence. Okay, folks, so two situations, right? So let's have a look at the first one. If there's a disagreement with the accounting standards, then what we have to do is we have to assess the materiality as well as the pervasiveness, right? Is the issue material, as in is it exceeding my financial thresholds for exam purposes, right? And secondly, is it pervasive? Is it converting, let's say, losses into profits, or vice versa, or liabilities into assets, etc. Okay, folks, so that's basically the idea. So if it is material but not pervasive, then we provide a qualified except for opinion. If it is material and pervasive, then an adverse opinion. Okay, folks, that's basically the situation. This chart is very important, so remember that. However, if you look at the next situation, inability to obtain sufficient and appropriate audit evidence. Again, we look at the materiality and pervasiveness. If it's material but not pervasive, again, we have qualified except for opinion. But if it's material and pervasive, then we provide a disclaimer opinion as well. Okay, folks, so that's basically as to what the audit opinion chart is all about. Remember this chart, remember the route, so that you can easily answer those, impact on auditor's report questions. Okay, folks, so it's easy 5 marks in the exam, isn't it? So remember that. Now, moving on to the next part, we have another standard which is in relation to the subsequent events, right? So when it comes to subsequent events, what's the idea? We're looking at events that occur after the reporting period, right? So that's basically the idea. It's primarily in relation to your accounting standard IAS 10, right? In IAS 10, we know that there is adjusting events as well as non-adjusting events, right? Adjusting events that are those that require an adjustment to the financial statements. And for non-adjusting events, if it is material, then we will disclose it in the financial statements, else no adjustment is needed. Okay, folks, so that's basically the idea. Okay, folks, remember that. Now, when it comes to audit, right? So there are a few things that we do post year end, right? So starting from the year end, I'll just mark that timeline for you as well, right? Starting from the year end date till the auditor's report date. Okay, folks, the date in which till we sign our auditor's report, we have an active duty. Okay, folks? And post that, we have a date in which the financial statement is also issued, right? We have a passive duty as well. Okay, folks? And we also have a passive duty even after we issue the financial statements as well. Now, what is this active duty and passive duty all about? For active duty, what we do is, of course, we whenever there is a a subsequent event that's happening, especially an adjusting event or something like that, then we recommend the management to make this particular adjustment, and then else we won't either sign the auditor's report, or we will provide a modified opinion, right? So that's basically how we will I would say go to the management with as a response to that particular non-adjustment, right? So that's basically the idea. Now, secondly, if it's passive duty, see, if it's active duty, we can take action, right? And the management will have to comply with that particular situation, comply with our request, and they have to make the amendments. Otherwise, we will issue a modified opinion in my auditor's report, right? And that can look bad for that particular client, right? So that's basically the idea. Now, secondly, when it comes to passive duty, let's say that I have signed off on the auditor's report as a partner, and then later on, after I've issued my auditor's report, I'm getting to know that there is this adjusting event that has occurred, right? Let's say one of the customers or some major customer or someone has declared a bankruptcy or something, right? And that is an adjusting event, right? So what I would have to do is, again, there's no obligation for us to perform this particular procedure, but we still do it since it's ethically correct, right? So we will have to contact that particular management and ask them to make the adjustment. Okay, folks, if they refuse, of course, there is a tendency that they might refuse as well, right? If they refuse, then, we'll either ask them to obtain a written representation, and then what we will do is, or if it's a really material issue, then what we can do is we can, recall the auditor's report, right? Or we can ensure to take steps to ensure that the public is not relying on our auditor's report. Okay, folks, we can publicly announce that, hey, this particular report is not reliable, there's this particular adjustment which they haven't made, etc. Okay, folks, so that's basically the idea, right? So that's the passive duty. And the same goes for the next step as well, after issuing financial statements as well. But the problem is that, see, once the financial statement has been issued, then it's kind of difficult to call it back, right? But again, we have to insist the management on calling these back, and when they reissue the financial statements, they have to inform to the users of financial statement that, hey, this has been revised as well. Okay, folks, so that's basically the idea. So there are a few, I would say necessary steps that are there, and we've discussed this in detail throughout our sessions as well. So go through it once more if you are a bit doubtful regarding this particular topic, because it can be tricky, like unless if you can't think of the timeline properly, it can be a bit tricky. So, practice more questions and then go through those lectures once again, for your understanding. Of course, if you have any questions, feel free to reach out to me as well. So that's basically the idea. And what else do we have? Yeah, going concern. Okay, folks, there's also standards in relation to going concern as well, right? So when it comes to going concern, there are three situations that we primarily focus on, right? So the first situation is when the management has made an assessment. Second situation in which is when the management has not made an assessment. And the third situation is when the management is a bit doubtful regarding the going concern status. Okay, folks? So let's have a look at the first situation first of all, shall we? In the first situation, there is two scenarios, right? First of all, the management assessment was right. Okay, folks? Management assessment was right. The company is a going concern, and the financial statement has been prepared on a going concern basis as well. In this case, we issue an unmodified report because there's nothing wrong, right? So that's basically why. Now, the second situation, this is what I was stressing, quite a few times in this particular session, right? The company is not a going concern. Financial statement was prepared on a breakup basis. Okay, folks, breakup basis is when the company is, liquidating and, they are recognizing all their assets in their NRVs and stuff like that, right? So that's basically the idea. So in this situation, I will be providing an unmodified opinion, but with an EOMP paragraph. Not an MURGC, but an EOMP paragraph. Okay, folks, so remember that. So this is the first instance. Now, secondly, let's say that the management has made an assessment and it was a wrong assessment. Okay, folks? See, if it's a wrong assessment, then it can mean either of these two situations, right? Either the company is a going concern and the financial statement has been prepared on a breakup basis, or the company is not a going concern and the financial statement is prepared on a going concern basis, right? These are the two situations, right? If you look at either of these situations, Then is the issue material? Most definitely yes, because the entire financial statement values will be misstated, right? And is the situation pervasive? Answer is also yes, because all the amounts are misstated, right? So it's definitely a pervasive issue as well, right? So what we would do is we would issue an adverse opinion. Okay, folks. Okay, folks, we're not complied with the standards or anything, and the entire financial statement is misstated, so we will issue a adverse opinion. Okay, folks. So that's basically the idea. So this is the first situation. Now, when it comes to the second situation, what's the idea? See, management has no assessment at all. So there's an inability for us to obtain sufficient appropriate opinion. Sufficient appropriate audit evidence. So we will issue a disclaimer opinion as well, isn't it? Simple as that. Okay, folks. So that's what situation 2 is. And in situation 3, again, going concern status is doubtful, isn't it? So what would happen if it's doubtful? If it's doubtful, then we have to ensure that there are adequate disclosures, right? The management will have to disclose it as per the accounting standards. So we have to ensure that there is adequate disclosures. If there are adequate disclosures, then we will issue a modified opinion with an MURGC. Why? Because now there is a material uncertainty regarding the going concern status, right? That's basically why we are providing an MURGC paragraph. Now, second situation. What if there is a inadequate disclosure? Inadequate disclosure can mean two things. Either they've completely omitted this from the financial statements, as in they haven't disclosed anything at all, or they have partially disclosed it, but they haven't mentioned much details. Okay, folks, these two things can be the case, right, for inadequate disclosures. Now, if they've completely omitted, then definitely it's going to be material and pervasive, and then we will definitely provide an adverse opinion. However, if it's just material, as in they have disclosed it, but they haven't disclosed the details as such, then we will provide a qualified except for opinion. Okay, folks, because the users have a right to know the reason as well, isn't it? So the basis of the conclusion as well, right? So that's basically why. All right, folks. So that's basically how we provide an opinion in the case of a going concern as well. This is also really, really important and kind of commonly tested in the exam. So just keep this in mind. Now, moving on to the red flags, okay, folks. So what exactly can indicate a potential going concern issue? Well, there can be an inability to repay debts, by the client, right? Loss of key staff, successful legal claim against the company, and then emergence of a successful competitor, which can, lead to loss of revenue and ultimately losses. Technological change that can impact the businesses, changes in laws, inability to obtain credit from suppliers, failure to pay staff salaries or wages, heavy fines and penalties imposed on the company, as well as breaching loan covenants. What are covenants? Covenants are basically the terms and conditions that are attached to the loan agreements. Okay, folks. So if they breach it, then the entire liability will become immediately payable. What we recognized is non-current liability will immediately become current liability. And if the company cannot pay it back, then it's going to lead to a going concern issue, right? So that's basically the idea. Okay, folks. So yeah, that's the indicators of going concern. And finally, we have management representations as well. Now, this is also a kind of a really important topic that needs to be looked into. And it's kind of like the go-to last resort procedures, substantive procedures, I would say, that most students use in their substantive procedure questions as well, right? If they don't get anything, they'll just say obtain written representations regarding the matter. So please only write it in the appropriate scenarios. Don't just use it as a last resort for your substantive procedures. And when writing substantive procedures in the exam, guys, remember, guys, as in it has to be linked to the scenario. Okay, folks, don't just write by-hearted or generic substantive procedures in your exam. Always write substantive procedures which are specific to the scenario. That's just an add-on point that I wanted to point out. But yeah, now any which way. So so written representations, like we don't have to go through all of these, as in first of all, do you think it's a strong evidence? Answer is no, right? It can be used as supporting evidence, but it's not a strong evidence on its own. Now, another point is, how is it structured exactly? So guys, the content of the written representation is again prepared by the auditors, right? And we share it with the client, and the client will copy paste it into one of the company's letterhead and get it signed from the CFO and CEO. Okay, folks? And of course with the date as well, right? So that's basically it. Okay, folks, this process needs to be understood. The content is always prepared by the auditor, right? Because we don't want any loopholes or anything coming in that particular agreement, right? So that's basically why. Now, what else? the document should be received and signed before the audit report is issued as well. That's also another important point. And yeah, that's basically it. Okay, folks, that's basically the few quick points that we need to look into when it comes to written representations. Okay, folks, so remember, guys, it's not strong evidence on its own, so don't always write substantive procedures in every questions that you see. Okay, folks, so remember that. All right, so that's basically it. That's basically all I wanted to cover in this particular session as well. And yeah, that's basically the entire syllabus of Audit and Assurance. Now, remember, guys, I'll just quickly revise through all the structure of certain answers that needs to be there. For example, I know that there's most definitely going to be an audit risk question, right? So how should it be structured? When you're writing an audit risk, identify a risk from the scenario, which is basically a simple copy-paste process with some rephrasing, right? Explain why it is a risk, and then explain the impact on the risk in the financial statement. Does it cause an overstatement of assets? Does it cause an understatement of liabilities or expenses, right? All these things needs to be mentioned properly, right? And then the response, right? The response shouldn't be very generic like, maintain professional skepticism or discuss with management. No, it has to be very specific to the, the risk that you've identified. Okay, folks, remember that particular aspect. Now, secondly, when it comes to substantive procedures, right? Substantive procedures should have two elements: what needs to be done and why we should do it. Most students tend to skip out on the objective part. Remember, guys, the examiner wants to know why you want to conduct that procedure as well. Okay, folks, so always write the objective, which is usually to satisfy an assertion or to obtain an understanding of something, right? So always write the objective, do not forget that. And it should have three elements: the action verb, as in what needs to be done, right? The action verb and source document, right? And then the assertion or the objective. Okay, folks, as we call it. Okay, folks, these elements should be there: what needs to be done and why we should do it. Otherwise, you won't get marks for it. Okay, folks, so remember that. And there should be a logical connection between them as well. Otherwise, you won't get the marks for those substantive procedures. Now, we've practiced a lot, so I would say go through those examples once again, so that example substantive procedures which we have in one of the course books, right? So just go through that one last time, just so that you can get a better understanding of some procedures. Okay, folks, that can come to your mind. Now, thirdly, right, we've covered audit risk as well as substantive procedures. Now, thirdly, there's also control deficiency questions as well, right? They can either ask for for you to identify certain control deficiencies, or there can be questions where you need to identify strong controls from the scenario as well, right? So look out for the controls, right? If you're mentioning a deficiency, identify the deficiency, copy paste the scenario instance and then rephrase it a bit, right? Explain how the deficiency can impact the client. Okay, folks, how the deficiency can impact a client. Will it lead to unnecessary payments? Will it lead to revenue related losses or reputation losses, right? So all these things need to be mentioned as well. Okay, folks, to get that 1 mark. Now, secondly, when you recommend the control, recommending control is kind of easy. It will be directly linked. For example, if the deficiency is that a particular invoice is not properly authorized to review, then the recommendation would be, review it, right? That's basically review. The appropriate senior official should be reviewing and signing off, right? That's basically it. Okay, folks, directly link your recommendation to your control deficiency. And for test of controls, okay, folks, so most students tend to have a challenge in identifying certain test of controls. By now, I hope it's resolved now, but still, okay, folks, when it comes to test of control, you can use the mnemonic. I'll just write it down over here. WIRECO, we've covered this in while we were revising through the part C of the syllabus as well, right? So WIRECO, what does WIRECO mean exactly? What does it stand for? You can maybe conduct walkthrough tests. You can inspect certain documents. You can reperform certain procedures that are there, right? You can inquire with the management regarding something. You can conduct computer-aided audit techniques like test data, or you can observe certain processes, right? So all of these test of control action verbs are here for you to give you an idea as to what can be done in a particular scenario. Okay, folks, so think through this if nothing comes to mind, right? And then finally, we also have a certain type of question which is basically impact on auditor's report, right? For impact on auditor's report, remember, guys, 5 things needs to be mentioned. Okay, folks. First of all, materiality of the issue, if it's in relation to if there's a financial impact for that particular issue, right? Secondly, if there's an accounting principle or something that's like is it a situation where there's an disagreement with the accounting standard, or is it an inability to obtain sufficient appropriate evidence? Okay, folks, so mention that, right, clearly, right? right? If it's, let's say, a disagreement with accounting standard, then you can briefly explain. Don't take too much time there, right? It'll only be 1 mark, so just briefly explain the accounting principle that they have not complied with. Okay, folks. Also mention if the situation is material or pervasive, you'll get marks for that, right? And mention the opinion. And finally, mention the basis of opinion paragraph as well. That's like an easy 1 mark when it comes to these kinds of questions. Okay, folks, just simply explain that the basis of opinion paragraph will mention the reason as to why we have provided the adverse opinion or disclaimer opinion or maybe the qualified except for opinion, etc. Okay, folks, so that's basically another way to structure this particular types of questions as well. But that doesn't mean that these are the only types of questions that you have to focus on, right? All the other theoretical topics are also relevant, right? There's no telling as to what can be tested as a direct theory for 4 to 5 marks, etc., right? So go through each and every topic step by step, and of course I'm always happy to help you out with certain questions that you guys may have. Please feel free to put it in the chat box or comment box, etc., and then I'll definitely cater to that as well. Okay, folks, so yeah, that's basically it. That's basically all about this particular session. I hope it helped you to refresh your memories, and I wish you all the very best for your upcoming exam. This is Vishnu Vijay signing off.